Recording. Recording started. Here we go. Okay, let's go on to the resident stuff. All right, so I apologize, right? This is going to be long again. It is a lot of information, right? One of our big challenges is like, how many sessions do we do? And do we make them longer and have fewer of them? Or do we, spread it out? And it's like not very many, but you're here for like 2 months or 3 months doing training sessions. So anyway, we are here. We're going to talk about income, adjustments, deductions, and TaxSlayer Practice Lab. I will do my best to try to be as quick and yet as clear in all of that as I possibly can. All right, we'll do some reminders, talk about Moodle, so on and so forth, all right? Again, this is the same thing, right? We're going to teach like what the reality of the law is, what the tax software that we use is, but we will give you guidance where the income or the IRS publications and the IRS tests refer to pre-real tax law so that you can understand and be aware of that, right? And that we are dealing with those changes. So OB3, woohoo! Right, so a couple of things on Moodle. So I add people to the resident course based on their volunteer data quiz. Like I said, I was up to date as of about 4 o'clock today. If you wanted to do this and you don't have it yet, double check that you sent your quiz in. You can also just go into Moodle. I think that you should get an enrollment notification, but if not, when you go in, just click on that My Courses and check to see if you've got the yellow 1040 NR, then the big blue 1040 as the 2 courses that you have available. So a couple of comments on the who has to file a tax return quiz. So I made a couple of mistakes. The first one was for Mike and Mindy. So basically the portion of the Social Security benefits that are taxable depends on your filing status and the amount of income you have, which is what I knew, and I was trying to give you a good example for it. But I did not really dig into enough detail. Essentially, if there's a filing threshold, a provisional amount that says, hey, some of that income is going to be taxable, but that doesn't necessarily mean all of the income is going to be taxable. So for Mike and Mindy, their actual taxable gross income is going to be $18,800. That filing threshold was $33,100, so they are not required to file. So thank you, Kathy, for catching that one, as well as my fat finger typo on Roxy's standard deduction, which was $17,750, not the $16,550 that I put in place. So all of this to say, if you see a question and you're like, I don't think that's right, feel free to ask me, right? I am here doing my best to make sure everything is correct. Usually I'm right, but that does not guarantee that I am right. And I am one that loves the details. So I will not mind digging into it a little bit more to try to explain to you why I said this is the right answer, or say, oof, actually, no, that was not the right answer. And let me make sure everybody knows what the right answer should be. So that's kind of where those things are. I would say the other thing here, right, if you were added late to the resident course, don't necessarily worry about the deadline, right? The deadline that we are operating to right now is that December 3rd, we're going to take the test. So if you run a little bit behind now and you're able to catch up later, that's totally fine. We've got training this week. We've got training next week. We've got a break in the middle there, the week of Thanksgiving, right? So we're not going to have class that week. Maybe we'll do a review session, something like that, but there's nothing mandatory there. So if you need to catch up, that is definitely a time that you can do it to kind of get ready for the test. So don't worry if you're running a little bit behind. All right, we're going to cover a lot of material tonight. Again, right, same thing with OB3, right? We know that there are big changes that they've put in place. Resident taxes were, although there is a lot more to them, they were historically much easier, right? So if we think about it, do I have it in the next? Oh yeah, I do. I'll talk about that in just a sec. So income things are impacted by OB3, adjustments and deductions are impacted by OB3. But historically, it was really great because we could just we would use the documents we'd have, we'd throw everything into the software would help us, it would all work out super well. The same general tax equation applies for residents and non-residents, right? We start with income, we subtract all of these things, we do our tax rate, we subtract our credits, we find out if we get a refund. We just have OB3 all over everything. All right. On this social engineering perspective, right? The other thing that I wanted to really kind of, I guess, make a point of, right, is that tax residents, by which you can interpret to mean citizens who vote, tend to get a lot of attention and special treatment, right? Oh, I promise if I come into office, I'm going to pass a law that's going to make everything wonderful for you if you have a name that starts with M, or it's going to be absolutely terrible if you have a name that starts with G, or whatever particular thing is whatever particular politician's cup of tea, right? So from a non-resident side, it's special, it's kind of in its own world, and often it is sort of insulated from a lot of the changes that happen. Whereas from the resident side, those changes do tend to impact our clients in a lot of ways. Usually they're in an attempt to make things great, right? Hey, no taxes on tips, no taxes on overtime, right? It's going to be wonderful. It just may result sometimes in not quite so wonderful for us as tax preparers as we try to assist our clients with getting through and submitting an accurate and correct tax return. All right, so kind of along the same lines, right? The software helps you prepare returns correctly when you're a resident. For non-resident, it'll do it, but there's not really much help. It's just it's better than doing it by hand because it does the math for you, but there's not much beyond that. The resident return software has built-in guides. So generally when you enter those income documents, as long as you get them in correctly, you enter the personal information correctly, the software kind of takes it from there and will help you through that process. We're a little bit challenged this year, right? Because the software is teaching or is working to correct tax law, or at least it is as they get it updated. The first version is out there. The first version is not complete and accurate and correct, right? They always release little mini versions, new releases as they get more forms and instructions that are finalized by the tax authorities. So it is an in-process thing for the next 2.5 months, in all honesty. But it's generally pretty good. So our challenge, right, is that when we do this, we're going to use TaxSlayer when we talk about resident taxes, right? Because it's a great tool. It does things correctly. We are going to lean on that. We're just going to know that for the IRS test, it's maybe not going to be such a wonderful thing because we'll have to make some adjustments. For a non-resident side, we don't touch the software at all. You don't need it for the non-resident test, and it's too much to try to learn the tax law and all of the things that go wrong with the software. So we keep those separate until the spring. All right, income, woohoo! These are all of the wonderful types of income that commonly are received by US tax residents. So the thing to know when you see this horrible long list, right? Number one, generally, because the IRS wants to know about it, they want to make sure that you're paying your taxes, there's going to be some sort of an income document associated with this income, right? So if you get that income document, you can enter it into the software, and the software is going to help flow that through to the appropriate place on the tax return. At least it will when everything is updated and working properly. All right, so this is what the 1040 draft version of the form looks like, right? This is the income section, and it's got all of these different types of income, right? Wages, and wages not on a W-2, and tips not on a W-2, and all kinds of other interest and dividends and capital gains and retirement stuff, all kinds of other businesses and all kinds of stuff like that, right? So all of those things are theoretically stuff that our clients could come in with. right? And when we do the IRS test, they will cover some of the most common ones. And some of these are definitely not in scope, right? Because they're not common or they become very, very complicated. And the IRS has said, nope, that is more than we want our volunteers to try to learn. We're going to call all of that stuff out of scope. But if some of it is, a lot of it is, we're going to walk through kind of at a high level what all of these different types of incomes are and kind of go from there. Okay, so again, what is income, right? Money coming in. Here is the IRS definition, right? All income received in the forms of money, good, properties, or services that's not exempt from tax, includes things inside the US and outside the US, right? So it doesn't matter where you are in the world. If you are a US tax resident, the US government would love their fair share of it, and they want to make sure they get it. Likewise, if you are, no matter where you are in the world, you should not attempt to hide money in Swiss bank accounts or anything like that, like other US citizens have done in the past. And so you are required to report your foreign financial accounts. And they have some pretty hefty 50% penalties if you don't do that. But that's kind of, sorry, that's out of scope. That was me editorializing. Basically, let's just say that all of your income, all of this money that you receive, all of the goods you receive, all of that needs to be included on your tax return. There occasionally can be non-taxable income. Sometimes that will not be included on your tax return. Other times it still has to even be included on your tax return, even if you don't have to pay any tax on it. All right. Earned income is when you actually have to do something, like you show up as an employee, you own your own business. Unearned income, right? That's the things like dividends, stock income, rental income. You own a condo that you rent out to somebody. You don't have to show up every day to do something. You just get that rent every month. That's considered unearned income. But unless there is an exception, like an explicit exception in the tax law, generally all income is considered taxable income. Here is a big list. Again, this is the 4012 as it is today, so it might change a little bit, but I think it should still be accurate. These are all examples of all the different possible types of income that people could receive. And then again, right, pretty much almost all of these are going to have some sort of an income document associated with them. Oh, congratulations, you have canceled debt income. You're going to get a form that shows how much debt was canceled. You have royalties. That's wonderful that you had, a famous song. You're going to get a form that says how much you received in royalties, all of that stuff. So we're going to talk about the most common ones. So wages, salaries, and tips, right? This is that same W-2 form. It's going to be used by residents and non-residents to report income and taxes withheld, also Social Security and Medicare taxes that are paid by the individual. All right, the compensation is going to be in box number 1. So tips require advanced certification. So that's going to be things like you're working at a job at Starbucks, you get tips for that. Those are going to be included often. They will show up on your W-2. So for entering a W-2, the software is very easy, right? It has a little W-2 form and you go in and you enter it. You enter all of that information. It makes it very easy to do. I already talked about the no tax on tips. That's the same information. Same on the no tax on overtime. Same information. That's there. All right. Unreported tip income, right? So theoretically, if you are a waitress or a waiter and you are receiving cash tips, you should report those cash tips as income. That would be done on the 4137, and it would show up on this Schedule 2, which is where this is here. So it is not a commonly seen situation for us, is I think the easiest way to say it, but it is theoretically possible we might see that. All right. There are other types of income that you could have, household income, like if you work as a nanny or housekeeping, other types of income, other tip income, other kinds of waivers or benefits. Again, not very common. Adoption credits, earned income credits, combat pay, all kinds of other stuff, right? Again, this is the VITA program, which covers all American citizens. Our particular program is focused on students and scholars, mostly international students and scholars. We don't see a lot of those types of income, but it's theoretically possible that we could, in which case we would need to look at whatever income documentation we had to support that, enter that into our software. All right, let's talk about interest, taxable and tax exempt. Interest has its own form, 1099 INT. Basically, they report the interest income, any penalties, any federal tax withheld or state tax withheld, any foreign tax paid, all kinds of other stuff that could theoretically be reported on the form that we would enter into the TaxSlayer software. If somebody gets a brokerage statement, the form will not look the same, right? It may look something like this, where it says Form 1099 INT. It doesn't have that same kind of boxy structure, but it still has that same line 1, interest income, line 2, penalties for early withdrawal, so on and so forth. So it could look a little bit different, but it's still going to be called a 1099 INT or a 1099 like DIV for dividends. So the taxpayer should get a 1099 INT if they receive more than $10 in interest income. Even if they receive less than $10 in interest income, they're still supposed to report it. If they have more than $1,500 of income, which is not very common for our clients, but if they did, there will be a Schedule B that gets added, which should basically list out, these are all the people that gave that person income. Same thing for dividends as well. All right, some types of income or interest income can be tax exempt. So like a bond for a city government, they would issue bonds and they would say, okay, because we're a city government, you don't have to pay federal or state taxes on the interest that you earn for those bonds. Those would get reported to the taxpayer in box 8. Again, not something that we typically have to worry about. But then again, also, right, it's going to be on the form. So we would just enter the amounts that are being done in the appropriate boxes, and we're good to go. We will generally, right, we're going to believe the payers, right? If somebody gives us a form from like a 1099 INT and it has whatever numbers on it, right, we're going to take those words as truth, right? Because whoever produced that form, right, they sent a copy of it to the IRS, you know, and they had to sign on their paperwork under penalty of perjury. This is true, accurate, and complete, and all of that fun stuff. All right, Mr. Jeff does a thing. Whoa, okay. Ta-dum-ta-dum. I'm going to come to that one later, Jeff. Okay. All right, let's talk about dividends, right? Here again is that Form 1099 DIV. Hypothetically, it could look like this. It could also look like the one that we had previously, right? Just like this here, where it's just more of a little table rather than that big boxy form. But they're going to still have the line numbers like 1A, 1B, all of those that you will use to enter the information into the software, right? And a dividend is, right, the company's making lots of money. They give some of it to their owners to say, thank you for, you know, being an owner. We're going to give you some of the money that the company made. All right. Qualified dividends versus ordinary dividends are based on how long you have owned that stock. So if you meet the holding time, generally a year, then I think it's a year, then you will be getting a qualified dividend, which gets a lower tax rate. The amount of regular dividends and qualified dividends is reported for us on that 1099 DIV form. So we are not figuring out like what is qualified and what is not qualified. The broker is doing that work for us. We're going to just be entering it into the software. All right, capital gains, right? That's where you owned an asset and you sell it and you made money on it. You sold it for more than what you paid for it. They're going to enter that into Schedule D. So this is very different than the non-residents. For non-residents that's not effectively connected, it's going to end up on a Schedule NEC, where they're going to probably pay 30% in tax, which is terrible. For a US resident, it's going to be much lower tax rate. It's going to be like a 10% or 20% kind of a tax. So they're going to pay a lot less in tax on it. But non-residents should not enter capital gains on Schedule D. Though we do always have some that are like, oh, this is capital gains, I'll put that there. Because the software for non-residents is not necessarily very intuitive for where to put that. Retirement income, super fabulous. If you have a retirement income, you would get a 1099-R, which basically says that this is a distribution from a retirement account of some sort. We do actually see a few of these. And the reason why is that our student clients, they have internships. So they will go work 3, 4, 5 months for an employer. A lot of employers these days will have automatic enrollment in their retirement plans. And then when the student is done, they leave the company, their employment is terminated. A lot of those same fabulous employment plans, if your income or your amount in your retirement account is below a certain threshold, they will just cash you out of it. And so those students will receive a 1099-R with a gross distribution of like $242 or some small amount. So it's generally not any kind of a large amount that we will typically see, but we do see a few of those every year. This is definitely a much bigger area of focus for traditional VITA programs, because a lot of the clients that are helped in traditional VITA programs can tend to be retired individuals. And so retirement income, whether it's IRAs or pensions, annuities, or Social Security, those are a very big portion of their income. So in terms of this, so one of the really important things when you do have a distribution from a retirement account is that usually a retirement account had some sort of tax advantage to it. Whether it is like a regular IRA where you put money in, you don't have to pay tax on that money up front, and it grows and it grows and it grows. And then when you retire, you can start taking money out, and then you have to pay tax on all of it when you take it out. Or a Roth IRA where you pay tax now and you put it in, and it grows and it grows and it grows. And then when you take it out, you don't have to pay any more tax. There can be things kind of in the middle, such as annuities or pensions, where some portion of it will be taxable and some portion of it is not going to be taxable. And that can be an area where we have to do a little bit of help, particularly for individuals in that situation, for calculating how much is going to be taxable and how much is not going to be taxable. Fortunately, the very fine folks out at Colorado Tax Aid have developed a tool. The link is here on the page. The link is also out in the Moodle course as well, that basically walks through, like, here is the person's age, and here was the value, and here's the amount that they took out, and all of that. And it will do all of the math to help you figure out, like, what is the taxable portion of that income. So if you are in a situation where you have an annuity or a pension that's reported to you, and you need to figure out how much is taxable, that tool right there is absolutely fabulous. It will make doing that very easy for you to do. All right. One of the key things when you're looking at a retirement form, a 1099-R, look at the distribution code. Some types of distributions, like if you are old enough to be retired, are just considered a normal distribution. There can be distributions where, right, the tax law says, oh, well, you can have some money out of your retirement account to buy a house for the first time, or to go to college, or because of an emergency. So there are reasons that are acceptable to take a portion of it out. Other times they will say, no, you're not supposed to be taking any of this money out. That is not a qualified distribution. And then those individuals can pay a little bit of interest and penalty on that amount, because theoretically this money got special treatment. It was supposed to sit there until you were retired, 55, 60, 65 years old, and if you take it out early, there is a penalty in addition to the tax that you may owe. All right, Social Security benefits. We probably won't see very many of those in our clinics, but they're on the IRS test. So they're a big part of other traditional VITA sites. So we'll talk about them a little bit. This is an old version of the form. The form still looks the same. They just don't publicize the form anymore, so I can't steal a new copy of it. But basically, they will report box number 5, what the income is. There'll be some additional supporting amounts in box number 3, generally. So look through that. Again, the software is our friend, right? If you tell it, I'm going to enter a Social Security SSA 1099, it's going to pull up an input form. It's going to have all of the same boxes, and you're going to just go through, put the information in there based on what you have in the various things that it says. Yes. So the calculation for what is taxable and what is not is complicated, right? Don't be me. Don't try to think, oh yeah, it's going to be good. It's just this number. Poof. There is a worksheet if you want to try to figure out how to do it manually to see all of the work that goes into it. But we can also generally rely on the software. We can't rely on the software now because it's not fully updated. But once we get into the filing season, the software is our friend. It will do the math correctly for us. All right, lump sum payments. This is again kind of that way to figure out some taxable is some not. You can do it a couple of different ways to figure it out. There are some worksheets again to figure it out. I mentioned this item in particular just because, right, these are things that may be on the IRS test that you're going to be able to or need to respond to. That 4012, even though it's not necessarily current tax law, that is going to match what is on the IRS test. That is another really good resource for you when you're trying to work through that. The 4012 in cooperation with TaxSlayer will get you through a lot of stuff for taxes for residents. All right, so capital gains, right? You bought something, whatever it might be, and then you sell it and you make some money on it or you lose some money on it. You're going to have a capital gain or a capital loss, and you need to report that to the government. In particular, all of the gains most certainly need to be reported to the government. Transactions involving digital assets, so virtual currency, NFTs, all of that kind of stuff, that is out of scope for the VITA program. Part of that is due to the complexity of reporting and the lack of transparency around that. So hypothetically, there were some laws that had been passed to try to start providing documentation about transactions, capital gains. This was what it cost me when I bought it. Here's how much I sold it for. If there is some external reporting by like the people that take care of your wallet, then they may start to look at trying to include that in scope. But that is a very hypothetical statement for, I would say, a future year or 2 or 3. As it stands right now, it's out of scope. We can't help it. The software does capital gains. We can point them to the IRS webpage that talks all about digital assets and capital gains, but we can't do the math for them. When we do capital gains, there is a long-term capital gain and a short-term capital gain, which is basically how long have you had it? Have you had it for a year or more? It's a long-term gain. If you've had it for less than a year, it is a short-term capital gain. Long-term capital gains get taxed at a different rate. There's a set fixed rate that they get taxed at. Short-term capital gains basically get taxed at your regular income rate. So that 12, 22, 24, 37 rates. So it generally is higher. So usually, well, it depends on what somebody's investment objection is, right? Or objective is. If they're trying to sell and buy really quickly and make money very fast, or if they want to buy and hold and sell less frequently and then only pay long-term capital gains. So in general, our taxpayers should have documentation for their capital gains, right? When we think about I forget, was it John and Max, the example that we had in the quiz, right? There should be some documentation that shows what they purchased it for. You know, maybe it's going to be on an official IRS form, maybe it's going to just be a transaction from a brokerage statement, but there should be documentation that shows what it is. For residents, excuse me, if you lose more money than you gain and you have a net capital loss, you can subtract $3,000 or $1,500 if you're married filing separately from your regular income. So you tried to make it big in the stock market, you did all this buying and trading, and you lost a bunch of money. You can subtract $3,000 from your regular income. You can carry over the remainder amount, whatever that might be, to a future year and subtract it. So it doesn't make up for losing the money, but at least it kind of cushions the blow a little bit. That is not something that is available for non-residents. So if they lose money on the stock return, their stock sales, they just lost money. There's no cushioning the blow or any sort of an upside to it for them. All right. So we talked about these kind of types of income, basically wages, interest, dividends, IRAs, annuities, and Social Security. Those are all basic level certification topics. We all do advanced certification, which includes tips as well as capital gains. So we'll also include the OB3 fund of the no tax on tips, no tax on overtime, however we figure out how to work through that. All right, I'm going to jump through this really quickly, right? Because the tax return covers, right, every possible type of income that you could have, because the IRS wants some of it. So if there's any of these other types of income, they all go on to Schedule 1. The software does this. The things that we see most commonly are taxable refunds, credits or assets from states. We also see a lot of scholarships. So that's where taxable scholarships go. There's all of these other types, alimony, business income, rental income, all of this stuff, not typical for any of our VITA sites that we help at. All right. Publication 4012 nominally, theoretically walks through all of these things. There's also a bunch of stuff that's out of scope that's on the Schedule 1 for the VITA program, right? Because this covers everybody in the world. So it includes a lot of other things that we don't have to talk about at the beginning of the 4012, which, by the way, this is the 4012. So that little booklet over there is the 4011 for non-residents. And this monster, you can see it, is the 4012 when you print it out. So this is why the electronic version of this is really good, because it's so much faster to be able to jump through it to get to it. Yes, that's what it looks like. So, but there is a scope section at the very beginning that is very helpful to see. So it walks through a lot of different types of the forms, and whether it's in scope or out of scope, or the certification required and all of that. This is the draft version of the form. Again, it's not released, so hopefully they'll be back in business and working on that soon. As I mentioned, right, there's now a little line, hey, digital assets received as ordinary income. So they may start to make it easier to include all of the digital asset transactions here. Nothing official yet. I just noticed that and wanted to point it out. All right, taxable refunds, right? We talked about this before. If you itemize and you get a refund, you have to pay tax on the amount of your state refund that you got, right? Because you subtracted, sorry about that, you subtracted all of that state tax that you paid. You didn't have to pay tax on that income when you first received it. So now you're going to have to pay tax on the part that you get back as a refund. Many states are super nice. They will send a Form 1099-G that tells you, hey, last year we gave you $372 in state tax refunds. Minnesota is not one of those states. They do not send any of those forms out. So generally what we do is we will look at their forms from last year. If you look at the forms, you can look at their federal return to see, did they itemize or did they take the standard deduction? And then From there, you can determine, okay, let's look at the Minnesota form. If they itemized, did they get a refund? Okay, that's the amount we need to include. For states that don't have a state income tax, like Washington, it can't possibly affect their income tax refund. And so they don't get a refund on state tax because they never paid any. So it doesn't ever even apply to them. All right. So on and so forth. Alimony, right? Court-ordered provision after a spouse or divorce, basically only for ones executed or revised before December 31st, 2018. It's not a common type of thing that we would ever see. Theoretically, we could. Business income. So there are a few types of business incomes that we can support. Basically, simple Schedule C or simple business returns. Businesses may get income reported to them on a variety of forms, right? They could get a 1099 NEC, which is non-employee compensation, like you're an independent contractor, you're working for somebody, they give you one of those forms. If you're selling a lot of stuff through like Etsy or whatever, you might get a 1099K that reports merchant like credit card payments. You could theoretically get a W-2 with a statutory box checked in box number 13. It could also just be the taxpayer's own records, right? Especially if there's a lot of cash income. Oh, I did this, I mowed lawns for the summer and I got like $100 from this neighbor and I got $50 from the other one, right? It would be like that, and it could be very informal. All right, I am gonna skip over that. So real estate, like all of these sort of very abstract businessy things like rental real estate, partnerships, corporations, trust, all out of scope for the VITA program. We don't have to worry about any of those. There is a one little tiny subset for VITA volunteers that help with military clients. If somebody is like deployed or is away from their home location and they rent out their house, then VITA can help those individuals. But that is not a certification that we train for. So we would not see that in any of our tax clinics as well. Farm income, out of scope for us. There is such a thing as farm income. Hopefully the farmers make lots of income, but we don't have to worry about it for the VITA program. Unemployment compensation, right? If you lose your job through no fault of your own, you may get unemployment compensation while you look for a new job. It would be reported on a 1099-G, right? Again, there's a type of income. There's going to be a form that reports it. This is the form for unemployment compensation. Hypothetically possible that we might see a few of these, but again, you've got the income form, you enter it into the software, the math should math out for us. All right. If somebody thinks that things are wrong, you need to contact the state government, right? We can't change forms for them. We're always going to tell them that we recommend and they should use the forms that were provided. And if they are convinced that the forms are incorrect, then they need to change the forms and get a new one reissued. And all of the forms that are provided here, the IRS has a methodology for providing a corrected version of them. So it is very possible to do. Other income, this is the one where we see a bunch of it for scholarships and fellowships on line 8R. So we will see quite a lot of those. Otherwise, not really very much of these. Okay. One last thing really quickly here. So one other type of other income we might see are things like, in addition to like gambling winnings, it's also awards, prizes, and contest winnings. So we definitely will see people that like you enter a case competition and you win $500 or something like that. That is considered income just like anything else is and does get reported. It would be reported to them on a 1099 miscellaneous if it was over $600. And it does need to get reported as income on a tax return as well. So not very common, but we definitely see a few folks every year that did something fabulous like that. That's what the form looks like. We're going to jump through that. Yeah. All right. I think we can just jump through that. All right. So in terms of the impact on the tax return, right? Basically, when we looked at the basic calculation, right? We have income, we subtract the adjustments and deductions and all of that, we get taxable income and go from there, right? If you have a business, your business has income, you can subtract the expenses for that business first, and then you report the net income on the tax return, right? Or you report the income and the expenses, and then the net income transfers over to the main 1040 front page of the tax return. If your net income is more than $400, because you're owning your own business, you're not necessarily paying Social Security and Medicare taxes when you receive that income. You will pay that when you file your tax return. It's called self-employment tax. The software will do that for us, but know that if you have your own business, you still have to pay Social Security and Medicare taxes. Likewise, when you have other types of income, like a scholarship or an award, anything like that, that is going to increase your income. It's going to get reported as other income on the main 1040 form, and you are going to pay tax on it. So that is basic stuff. All right. Any questions on that? I know that it's a lot. I know that I was very high level, kind of run through these different types of income. All right. I'm going to take another look at that question you had, Jeff, really fast. And see. So where did you find the, okay. 23,625. Where did I find that number? I found that number from, in all honesty, it was a tax roundtable linked file. So there is a there's a network of FIDA practitioners. They have like a listserv, like a roundtable they can post on. Everybody's posting about all of the OB3 stuff and what are we going to do and what are the numbers and how does it work. And so as people are going through the tax code to find what these new numbers are, they will post resources. And that was where that information came from. So I will double check that, but that would be where I attempted to take it from, Jeff. And I will double check to make sure it's right, because right, we obviously know that I got one wrong that Kathy caught. Okay. All right. I think we should probably just call it for today. What do you guys think? Is everybody up for a little bit more, or do you want to call it? Call it. You have to go anyway? Let me look where we are. All right. That's what I'm going to look to see. 86. Lots. There's lots. All right. Are you guys up for a little bit more? I mean, I know I'm good either way. What about my online people? Whoever's online. We've got 29 people online. If you want to keep going, raise your thumb or give me a chat. I'm ready to end. I kind of feel the same way, in all honesty. All right. You know what I'm going to do, right? Because I feel like this is really long. So I am going to add a new item in the resident course and just let people vote. Do you guys want to keep doing it like right afterwards? Or would you rather like do a separate section like on Wednesday night? We could have it a little bit earlier, so it would not be so late, but it would be 2 events. So I will let people vote on that. And we can see if we want to continue on like this. Okay. All right. So I'm going to leave we're going to stop now with income. We still have adjustments and deductions to cover. Plus, we have all of next week's materials as well. So it's definitely going to be a long week next week, just so everybody is ready for that. Okay. Okay. All right. So then let's go here at the very end. We're going to skip over. We're not going to do that. We're going to go here. All right. So theoretically, there should be 2 quizzes, 2 assignments, an income information and quiz, and then adjustments and deductions. I will release module 4 to everybody this week, and then we'll roll module 5 into our next week. All right. Okay. And with that, I am going to stop our recording.